Hello and welcome to Tax Matters. I'm Chiamaka Ohauchi. All over the world, tax administration more than ever before has become technology-driven. Businesses have largely moved from the brick and mortar space into the digital space. As a result, the taxpayer has gone digital and itinerant. The tax collector must therefore, of necessity, be nimble-footed and must be equipped with modern technological tools to be able to keep pace with the taxpayer. Nigeria, or better still, the Federal Inland Revenue Service, has taken this as an important consideration in its job of administering tax in Nigeria. This has been on for some time, but in recent years, technology has become much more embedded in the activities of the service. Viewers will readily remember TAXPRO-MAX, the in-house end-to-end tax administration solution driving the work of the service. TAXPRO-MAX delivers a wide range of services, prominent among which are the filing and payment of taxes. And from 1st of January 2023, it became possible to obtain tax clearance certificate at the click of a button. Now, beginning from the filing of VAT returns for the month of April, the updated VAT filing procedure on the TAXPRO-MAX will take off. Mr. Muhammad Nami administration at the FIRS is guided by his 4 cardinal pillars, one of which is improving stakeholder relations for improved tax administration. And as the saying goes, no man is an island, just as no organization stands alone. The FIRS is in close touch with sister revenue agencies across the world. The FIRS plays a major role in WATAF, in ATAF, and in Qatar, where the executive chairman FIRS is the incumbent president. On Thursday, 16th March 2023, the FIRS signed a Memorandum of Understanding with the UK's Revenue and Customs for collaboration on capacity building with a view to fostering improved collaboration on capacity building between the 2 tax authorities. The agreement was signed in London. In attendance at the signing ceremony were the Executive Chairman FIRS, Mr. Muhammad Nami, some members of the FIRS board and management. On the side of His Majesty's Revenue and Customs were a director at the HMR&C, John Sharma, who was supported by other members of the HMR&C Executive Committee. In his remarks, Mr. Nami noted that the envisaged collaboration was in line with 2 of his cardinal goals for the FIRS: building a data-centric tax authority and improving the service's collaboration and stakeholder relations. Mr. Nami said, "Data is the new oil. Its collection, interpretation, and consequent application for tax purposes has become crucial if the service must be ahead of the taxpayer in the times we are in. I am certain that this relationship would equip our officers with the skills of the 21st century taxman," he stated. Mr. David Yeloli, head of capacity building at the HMR&C, emphasized that the MoU between the Nigerian and UK revenue authorities would see the 2 countries collaborating on capacity building, particularly on issues surrounding country-by-country reporting standards, transfer pricing, exchange of information, data, and audit in the oil and gas industry. You are still on to Tax Matters. Last episode, we shared with you the first part of our feature on capital gains tax, and our guide was Mr. Taiwo Oyedele, Fiscal Policy Partner and Africa Tax Lead at PwC. We want to serve you the concluding part on this episode. Mr. Oyedele, welcome once again.
Thank you.
Now, I would like to know, why do you think capital gains tax is not as popular as companies' income tax, value-added tax, withholding tax, and other tax types?
Yeah, that's a good observation. Yeah, because even if you look at the report by even the FIRS, it's usually like out-of-pocket revenue And some states, there is zero collection from CGT. I think there are two main reasons. One is capital items by their nature are less frequent. So if your business is to buy and sell bags of rice, you're likely to sell a bag of rice at least once a day. So you sell it every time. But the vehicle that you're using to carry the rice, you don't buy and sell that vehicle every day. You may find that the whole year you're not buying the vehicle and you're not selling it. So because it's infrequent, people are not conscious of it. So when it happens, they don't even think about the tax. So that's one big aspect. The second aspect is that, apart from FIRS making some effort, some states don't even know they're supposed to be collecting CGT. In fact, if you go to the forms that you are supposed to fill to file returns at the state level, more than 90% of them have no line for the CGT. So when you want to pay, you have to go and beg them and say, by the way, I like to pay CGT. Say, what's that? Anyway, so those are my views on a lighter note.
In your practice experience, have you experienced a situation where a taxing authority, FIRS, or any state internal revenue service has called out any organization or individuals for failure to declare gains and thereby pay capital gains tax?
At the FRA level, the answer, at FIRS level, answer is yes, certainly. Maybe it needs to happen more. Because FRS, they have the opportunity of, you submit returns to them, they see your financial statement, they'll see disposal of assets. So that will usually trigger a question around CGT. And if you are found wanting, you pay the penalty and interest. At the state level, very, very minimal. In fact, I think maybe apart from Lagos State, and it's mostly around compensation for loss of employment because it's liable to capital gains tax at 10%. So I'll say at the state level, almost close to zero. At the FRS level, a few queries and inquiries, but it needs to be more.
Now, also, how often do issues relating to capital gains tax crop up in tax filing and auditing?
So in terms of the filing requirement for Capital Gains Tax Act, historically before the 2020 amendment by the Finance Act, people or taxpayers, I should say, file CGT returns along with their company's income tax return. That's for corporate entities. For individuals, I don't know anybody who has filed, but they were supposed to normally file it along with the personal income tax returns. In fact, the problem with personal income tax returns is I do think that more than 90% of Nigerians don't even file personal income tax returns. If they are in employment, they just assume their employer has done PAY returns and that should be sufficient. But that's not what the law says. You're supposed to then say, in addition to my employment income, I also have a property, I collect rent, I have investment, I collect interest and dividend. You declare all of it. That doesn't happen. And so therefore, CGT at the state level doesn't seem like something that is common. Now, the 2020 Finance Act then made a new provision, which is that you file returns twice a year. One, 30th of June, the second one, 31st of December. But you only have to file the returns if you had a transaction that is liable to CGT. If it happened between 1st of December of the previous year and 30th of May, right, of the current year, you file it 30 days after, which is 30th of June. Anything that happens from 1st of June till 30th of November of a particular year, you file it by 31st of December of the same year. Of course, the FRS will be happy if you file it early. So those dates I'm giving you are the deadline. You must not exceed that. If you do, to the second part of your question, there will be penalty and interest. So penalty will usually be 10%, and interest will be monetary policy rate plus a spread, 5%. Sometimes they apply it, sometimes they don't. But there will be interest, usually in practice, somewhere between 19% and 21%.
Is government actually making what it should be making from capital gains tax?
Yeah, I think government is not making anywhere close to what they should be making. So at the federal level, maybe FRS will tell you they've collected certainly less than 100 billion in a whole year. In fact, there was a year when I looked at the report and I said, this capital gains tax looks like the CGT should collect on one big property in Abuja, the whole of Nigeria for a whole year for that matter. And just to give you an idea, if you just focus on property, real properties alone, Just imagine the volume and the value of transfer of property. Just take Lagos City alone and go to the land registry. Number of times people have bought and sold land and building. Just take all the capital city alone. Those numbers should be in trillions. But because, one, government is not serious, we're not using data. If you map, there are countries where they've mapped properties. I went to Rwanda, and the Rwanda Revenue Authorities was saying to us that every single plot of land has a unique identification. That if you just go on the land with a mobile phone, it will pick the coordinate and give you all the information about that land. At the tax office, they can scroll like this and zoom in and see the property. If you haven't paid the taxes, it will put a red flag on top of that property. And they can go and meet the owner and say you haven't paid. So we need that level of technology, training for the officers, and willingness. If we do everything right, that's trillions of naira potentially for government.
Now, there was an information circular issued by the FIRS on 11th April 2022 with the title, Clarifications on the Provisions of Capital Gains Tax. Would you know what gave rise to this clarification? It's quite a lengthy document, and we want you to please help us make sense of it.
Yeah, I know tax can be boring, so I understand why he thought it was a lengthy document. Someone said to me that he thinks I'm a strange and weird person. I said, why would you say such a thing? He said, you talk about tax and then you smile. That who smiles when they're talking about taxation? So some of us have to look at those documents, whether it's long or not. Some of the reasons why it was produced, I've explained. One, there was a provision on taxation of compensation for loss of employment. And it says, if anybody loses their job and they are paid a compensation, if it's not more than 10 million, they can go and spend it in peace. If it's more than 10 million, then the employer needs to deduct capital gains tax and pay it to the tax authority. So they are providing that clarification in that circular. Another thing was the filing of CGT returns. So I won't repeat myself since we already said it, about the 2 dates, when it starts, when it ends, what you should provide. And then the third one was to do with airlines, aircraft, these vessels that operate in international space. So the plane will take off in Lagos and it will land in Houston. The next day it's going to London. It's just flying all over the place. You say, where is this asset? When you sell it, where are we going to say the asset is? Is it where it is parked when it's sold? So the law says it is where the owner of the asset is resident. If the asset, like an aircraft, is operating in international traffic. But if it's an aircraft that is operating in Nigeria, Lagos to Ibadan, Ibadan to Abuja, Abuja to Benin or Port Harcourt, that one, you pay the tax on it if you sell it in Nigeria, even if that aircraft was not physically in Nigeria when it is sold. So those clarifications were the things that the FIRS did in that circular, which I believe is a good thing. Even when you don't agree with the tax authority, it's always very useful to know their position. It reduces uncertainty for businesses.
Oh, all right, sir. Now, finally, before we let you go, how would you factor inflation into determining whether capital gain has been made on an asset which will give rise to capital gains tax?
This is a foreign company, so they brought in a lot of money, I think something like $500 million, and they invested in some strategic companies in the stock market, listed companies. So they bought many of their shares, of course, maybe to the extent that those companies even became their subsidiary or associates. They did that around 10, 11 years ago. So you brought in $500 million, you converted it into Naira, you bought the shares in the capital market. Fast forward to 2022 last year, they sold. So something they bought at maybe 50 Naira per share, they sold for like 70. FIRS said, you have made a gain. So they collected 10% from them. Meanwhile, the entire amount that they sold the shares for was less than half of what they brought in originally in dollar terms. So this is a very practical example of taxing someone on paper gain, when in reality they had made a loss. So the way it's done around the world is there's something called indexation. It will take the inflation rate and keep adjusting it. When you bought at 10, but that same 10 naira, what it can buy at that time, if you didn't buy the shares, it would have bought something worth 30 naira now. So if you sold for 30 naira, they will not ask you to pay capital gains tax because this is just the same amount you invested. You know, we haven't done that in Nigeria, and I think we need to do it because what would then happen is we unfairly punish people for wanting to invest, particularly because we need a lot of these long-term investments for our economy to grow.
Really, thank you, Mr. Taiwo Oyedele. It's really a pleasure always talking to you and also gaining from your wealth of knowledge and experience. And we hope that when next we call on you, oblige our call.
Indeed, always. Thank you very much for having me.
Thank you very much, sir. We want to thank Mr. Oyedele on your behalf, and we do hope that you have become better enlightened and educated on the subject matter. One of the cardinal pillars of the Muhammad Nami administration is to build a customer-centric organization. At the FIRS, the taxpayer is considered as a customer. And so, from time to time, the service engages its customer base in discussions aimed at improving and making a good system even better. On Monday, the 13th of March 2023, the FIRS hosted a webinar on the impact of digital innovation in tax administration. Beginning from this episode, we'll be sharing with you snippets from that highly educative webinar.
Today's webinar is focused on the digital innovation that enables taxpayers to get their tax clearance certificates, TCC, in 1 minute, and the updated VAT filing procedures on the TAXPRO-MAX solution. This is in our continuous efforts to build trust and increase citizen willingness to pay taxes.
Chief Host, Executive Chairman FIRS, Mr. Muhammad Nami, began his keynote address by appreciating the contributions of taxpayers, stakeholders, staff and management, which resulted in the sterling tax collection performance of the service in the year 2022.
The year 2022 was critical. We set a new collection records as a service. We were, because of your support, because of the trust you have in the government, the trust you have in the FIRS, and the belief that we as citizens of the Federal Republic of Nigeria are the only people that are responsible for building a prosperous country. We achieved over 10.1 trillion of collection, which was about 66% over the collection that we recorded in the year 2021. The deployment of the TAXPRO-MAX, that is our in-house developed solution for end-to-end automation of tax administration processes, was a game changer. I reaffirm that FIRS is ready to proactively support any initiative that you will suggest to further improve the deployment of technology so that it is the work we do, and also support you in your voluntary compliance ability. As a customer-centric institution, we want to make the burden of tax paying as easy as possible.
2 papers were presented. The first was on the theme of the webinar, the impact of the FIRS digital innovation in tax administration, while the second was on data aspect of digital innovation in tax administration. There were also presentations on updated VAT filing procedure on the TAXPRO-MAX and getting your TCC in 1 minute. On this episode, we want to share with you the presentation on updated VAT filing procedure on the TAXPRO-MAX.
So these are some of the most important things to note. There is currently provisions for sales schedules, which requires every taxpayer to fill in those who they deal with, the people you have provided services to, the people you have sold goods to, and whether it is VATable, whether it is zero rated, or whether it is exempted. I'm going to be showing us the demonstration of how this will be done when it is eventually deployed. This is the dashboard of a typical taxpayer. So I come to the taxes due. I have the VAT for February, I have the VAT for March. Note that you cannot process the later VAT if the earlier one is yet to be processed. So we'll start with the February one. Now, unlike what we had before, where you have goods and services for exempt, we have zero rated, we have sales adjustment and the VAT form. Now, under the sales schedule, we now have where you can download the sample templates and impute your figures. So the sample template is actually in an Excel, just like you know what we use currently in the area of filing our withholding VAT and the withholding tax. So upon uploading the documents, the system is going to validate the details against the TIN provided for each of the taxpayers. Once I upload the schedule, the system is going to verify and validate all the information that is on that schedule. And it's going to provide me with the details and the description as stated in the schedule. So at this point, if there is any error in any of these, I can easily just remove any one of them. Say, for example, I have this. You can see I have, because I already inputted it before. So I can remove one of the items on the schedule. So having done that, the next is to select, it's going to give us the total amount of the VAT. And you can see the legends that we have here. We have those that are VATable is this amount. Those that are zero rated is this amount. Those that are exempted is also this. Then you select Naira. As we currently know, TaxPro processes Naira denominated transactions for now. In the very soon, the foreign currency loan is going to be done. Next is to click on proceed. Then we proceed. This is where we're supposed to have our purchases. Now, say for example, let me go back. If I am taxpayer A and I have bought goods from taxpayer B, when taxpayer B files its own returns and fill in the information on the sales schedule, whatever that relates to me as taxpayer A is going to populate here from all the sources where I have had purchases from. Then proceed, then it takes us to the VAT form itself. Now it gives us the total sales, it gives us the total that are exempted, total that are zero rated. Then the sales adjustment is going to also give us the value. Then we have the sales and income that is chargeable to tax, which is those that are VATable. So you can see that the system has calculated the output VAT for us. And for purchases that were not wholly used in making VATable, you can still fill it. So having done that, the system does what? Including for the MDAs, we know before now you are expected to impute your deducted VAT at source on line 190. So upon the filing by the MDAs as well, so those figures is going to populate here for you to be able to offset to be able to claim your inputs from the output that is calculated. Then we come here and click on the declaration. So it tells you that please check the amount to be paid is this amount. If the amount is not correct, please do not submit. Upon agreeing to this, then you are expected to pay that amount. So then the next is to submit. Having submitted is going to take you to the point of payment. Now you can see that at this point I have the LRP, I have interest and penalty, because the system has been so designed in such a way that when returns are filed late or after the due date, the system takes into account the interest and penalty that is associated with such returns, and thereby does the calculation in line with the provisions of the law and in line with the CBN rates. Please let us also note that this VAT is to be taken off from April filing So we should be expecting it any moment from now to be deployed.
I'm a very busy man. My business involves a lot of traveling and I interface with lots and lots of people and organizations. Tax compliance used to be a big drag on my business. It was time consuming and very costly. But now, no more. Introducing the FIRS TAXPRO-MAX, the truly fully end-to-end tax administration solution for companies' income tax, value-added tax, petroleum profits tax, and all other tax types. For fast, efficient, and convenient end-to-end tax experience, log on to www.taxpromax.firs.gov.ng. TAXPRO-MAX has turned things around for me. It is fast, user-friendly, and cost-effective.
Next episode, we will share with you Mr. Hali Uharono's presentation on getting your tax clearance certificate in 1 minute. We thank you for watching today's episode of Tax Matters. Do join us next week. Same station, same day of the week, same time of the day. Bye for now.